What's going on, everyone? Happy Monday. It's time for the Security Token Show. Time to get in all the latest things happening in RWAs, tokenization, etc. We're your hosts. I'm Herwig Konings, joined as always by my co-founder, Kyle Sonlin. Whew, we got a great show this week. Huge announcement for RealT, Kyle. How you doing today?
I am great. We're talking episode 224, Herwig. We are fully into 2024 as a year. We're rolling. We're seeing success across the board. The markets are healthy and liquid. Gosh, doesn't it feel good to be in blockchain? I can't wait to dive into it today, Herwig.
Well, with that, I think we should. Time for the Token Debrief. Whew, man, what a week last week, guys. We have some major announcements. I think I have to kick it off with what I think is probably one of the biggest institutional drops to happen so far. We've got Citi leading the charge, announcing that they've worked with Wellington, Wisdom Tree, and the DTCC's new digital assets division after acquiring Securrency to tokenize private funds, guys. This is amazing. It is just a proof of concept, but it is big news. I think I've seen more articles get published around this than I've seen any other proof of concept, even Project Guardian, which I thought was also pretty big news. But basically, they use the Avalanche Spruce subnet to leverage tokenization to enable what they say buy and sell side institutions to engage with distributed ledger infrastructure in a low risk, low barrier to entry manner that is consistent with regulations. AKA, that is Citibank saying tokenization is legal, it works, and it's cool. People need to get that and understand that if they still think the American regulation, the US regulation is behind. But they also used ABN AMRO, who simulated the role of a traditional investor. They did a proof of concept that tested the tokenization of a Wellington-issued private equity fund that they brought onto the Avalanche subnet. And then the underlying fund distribution rules were encoded into the smart contract and embedded in the token transfer to supposedly, in this case, it's a proof of concept, but then would be sent to Wisdom Tree clients, right? As the asset manager. They say it demonstrated how smart contracts can enable, quote, greater automation and potentially create an enhanced compliance and control environment for issuers, distributors, and investors. They did a lot of different scenarios of transfers using the smart contracts, where this is where the DTCC came in to basically mimic the public kind of markets environment. And by evaluating, they say, quote, relevant technical, legal, and operational frameworks needed to bring traditional assets onto a digital platform, Citi explored how to support clients issuing and accessing tokenized private assets. So, guys, we know that Citi announced that they're in the tokenization game. This is a pretty big deal, given that Wellington is a $1.4 trillion asset manager, as well as Wisdom Tree, a pioneer, killing it in the game, as well as Avalanche underpinning all that. What do you guys think about this? Are you as excited as I am?
Absolutely. I mean, we just saw the other proof of concept that came out late last year. So great to see another one with new players as well. In terms of, proof of concepts here. A huge shout out, honestly, to Avalanche for providing some of that infrastructure that makes this possible, right? These subnets. We've seen past institutions also use this, such as, Wellington was already using it, T. Rowe Price, and of course, some of these new entrants. So huge props to them for creating an environment where institutions can then go ahead and, understand these new technologies and then hopefully later on bring it to full scale.
Yeah, no, I couldn't agree more with Jason with your analysis there. I think we're seeing this culmination of all these test and pilot transactions over the course of multiple years. Anyone who's been listening to the show since our inception, we've been covering all these adoptions, and despite the greater bear market across tech and blockchain and Web3 over the last 18 to 24 months, it has not stopped a lot of these institutions from experimenting with smart contract settlement, experimenting with stablecoin payouts, and now especially that we see more and more regulated financial vehicles in this space that are beginning to drive more adoption and inflows into the tokenization economy, it only makes sense that more and more and more institutions continue to explore what's going on. Great to see Wellington joining the fight. And into the next piece of news that we have here, we've got a company from Lithuania called Axiology that secured a $2 million investment. And their goal is to transform the EU capital markets, building tokenized securities platforms. And so this company is led by Dr. Marius Jurglius, and he aims to cut costs in the financial operations, which we see across the tokenization economy. The initial focus here is on government bonds. This has been the largest point of adoption we've seen over the last 12 months in tokenized securities, has been treasuries and money market style funds. And their goal is to launch a DLT transactional settlement systems license, presumably in their local jurisdiction. The goal is to go under the EU DLT pilot regime, which gives it exemptions around current securities regulations, I guess, as they explore their business model. And the company does envision to facilitate direct financial contributions into Lithuania's defense needs, as well as other securities operations. So major shout out to Axiology for driving more and more innovation in the European sector to build distributed ledger technology for capital markets.
I love this. This is one of those great examples of, Lithuania. You don't exactly think of that as a financial hub, a leader or a major player in the space. But, players like Axiology are going to put Lithuania on the map because thanks to very forward-thinking legislation and an environment over there, they may be able to really spearhead tokenization in a faster or broader, possibly better way than some other regulatory environments. Congrats to Axiology. That's no small sum of cash to get them going.
Absolutely, you guys pretty much covered that news there. Great to see another country and jurisdiction being represented in the tokenization space. Moving on to the next piece of news, we have the DTCC basically saying that blockchain won't be the answer to T+1 settlement by May of 2024. This is Jennifer Peeve, their global head of strategy and innovation over at the Depository Trust and Clearing Corporation, or the DTCC, who was talking at a symposium led by the OCC, the Officer of the Currency Controller, on tokenization of real-world assets and liabilities just last week. So essentially what Jennifer here is speaking towards is that, public markets, public equities markets are, there's a disconnect there because of these performance and scale that's needed that they already have and are working towards solving for T+1. But she did acknowledge that it's still a very good, concept tokenization for private markets and alternatives, right? So there is still some value there, as she quote says, high volume, low value, less developed infrastructure that alternatives and ETFs speak to. And so Ledger Insights article that kind of covers this did point out an interesting point here, guys, which is that of central securities depositories and their role when it comes to tokenization. And, quote, they said, at best, CSDs will evolve or alternatively will be disrupted. I believe in the former, they will evolve. We've already seen this with 6 CSD, which has on-chain and off-chain options. And they have brought actionariats, tokenized security tokens that represent their equity, making them bankable, essentially allowing traditional investors that prefer the traditional rails to be able to participate, and those that prefer the more Web3 option to do so as well, without necessarily compromising any operations there.
Interesting stuff there. I think it makes total sense. And we've seen the DTCC get super active in this space for quite some time now. And only proper that they are continuing to drive this innovation.
It doesn't shock me one bit. We're talking about public markets. They settle quadrillions in stocks every year. There's just no way by May that they would somehow get all those quadrillions onto blockchain rails. to settle. So, not surprised by that answer, and glad to see that they still basically backhanded said this is still the future. Love to see it. Moving on, we also saw a big announcement from Ripple, who is increasingly staking their name in the RWA and tokenization space, acknowledging that it is also the future of capital markets. They've been expanding their sort of services in that area, and they've been acquiring companies. We heard recently last year of the Medico acquisition, a custody solution that I believe was started by Archax and some folks, but now they've acquired Standard Custody and Trust Company, which certainly sounds like a very old institutional type company, but they're a digital assets company for institutions. So they do custody specifically, and it's just adding to their repertoire. They also mentioned in their press release, Ripple said that they're doing partnerships with top tier banks such as HSBC, BBVA, and Zodia Custody, as well as expansion to new territories for its Ripple payments offerings, including Africa. So they are definitely continuing on expanding, their core business of payments, but they're getting increasingly also into the custody game. We do know they love tokenization and that they've gotten involved in some projects last year, but custody seems to be really their next play, I think, before they actually are getting to tokenization, it seems. And we all know how important custody plays a role in all this. So a very interesting almost roll-up of custody companies that they're doing, guys.
Yeah, it's interesting. I think with digital assets especially, you don't actually need, it's a pretty scalable solution to be a custodian for these assets. They kind of are all, they're all held under the same roof, and maybe you have to take some precautions from a cold storage perspective to manage a few different wallets, but you don't have to really scale your infrastructure as your AUM scales. So I think that this makes sense from a realistic perspective, that there's probably going to be only a few solutions that are needed for the underlying custody of these assets. And, perhaps each individual bank or institution will have their player, and that's what's going on there. So other than that, I also have an interesting article here, which is from the Iowa Judiciary Committee. And they've approved a bill that integrates digital assets into commercial transactions. So they provide clear definitions for digital assets, and they recognize those digital assets as personal property. They suggest that smart contracts get legal standing, and the bill does distance the state from actually endorsing a CBDC or a national digital currency. The goal here is that purchasers of controllable electronic records will receive legal protection against those claims without a financial statement, with the bill aiming to modernize the regulatory environment for digital assets, focusing on legal clarity and consumer protection. And the reason why I found this to be pretty relevant, not only is it because this is a case of a state legislature bringing up real world asset tokenization and these types of things in legal bills, but also we have seen the SEC suggest in the past that a digital or blockchain based ledger cannot be used as the primary method of recording the cap table of a security. This is one of the few cases that we've begun to see where that may be changing. We're now seeing a regulator say, you know what? No, if you own digital assets, that is the record of account to determine if that is your personal property. This does fly in the face of what we've seen from the past in terms of traditional securities regulations here in the States. So interesting to see if this continues to get momentum. We know how bills go. They don't always get passed, but this type of rhetoric is, I think, important from the discussion perspective of evolving the U.S. securities and digital asset property laws.
It's definitely some kind of movement. It's on the state level as opposed to getting bogged up, right? As we've seen with every other bill on the federal level. So some interesting legislation that absolutely could pioneer some innovation for the state of Iowa, which is, I love how, you got Wyoming, you got, all these, South Dakota, I think is another one. You got these, again, similar opportunities for states that normally you wouldn't think to do business in are taking advantage of this innovation to further their economies. I'm going to jump right into Reserve Bank of India, guys, on the CBDC side as my last article. They are investigating tokenization specifically of government bonds and some other assets. They acknowledge it's not in a huge amount, but specifically for them to consider a wholesale central bank digital currency, which means that it's not for retail. It means that it's the banks commercially working with each other. That's why they call it wholesale, to move large amounts of money through a CBDC, in this case in India. They are thinking, well, why not have that also be able to use that for settlement into government bonds, buying into other assets, as we see with USDC as a very common payment solution and others. Wow. I love to see that the Reserve Bank of India, their central bank, is exploring government bond tokenization. We see a lot in U.S. Treasuries, but certainly not the government itself doing it. So love to see that news. Kyle, any thoughts on this? I think we lost Jason there.
Yeah, unfortunately, we may have lost Jason, but this does make a lot of sense for the Reserve Bank of India to explore. We've seen so many different jurisdictions trying to understand the use cases here. I certainly think that CBDCs have certainly their fair share of benefits for underlying jurisdictions, especially ones that don't have strong fiscal policy. But it also comes at a significant cost with respect to surveillance and many of the different privacy components that have been covered in the past. So great to see that countries are looking into this stuff, because I do think that knowledge is power. Understanding the context here is important. We've seen so many cases of regulators making flippant decisions based off of a lack of scope in terms of their understanding of the use cases. So I do think that research is a good first step. And yeah, kicking it out here, Herwig, I do have another article that I wanted to cover, which was the Nigerian SEC, the NSEC, officially approved Hashgreed for offering real estate-based digital securities. So Hashgreed is built on a locally formatted cross blockchain. So KROSS is the blockchain protocol built in Nigeria, and it enables co-ownership of prime real estate assets. We've seen real estate tokenization being a key driver since the very beginning of asset tokenization. So it's nice to see another jurisdiction, embracing this technology and this opportunity. Can potentially drive new liquidity and investment opportunities into Nigerian real estate. I know Nigeria has been a very successful economy in Africa. The platform is regulated by the Nigerian SEC, as I mentioned, and they're looking to license and partner with other capital markets operators there in their jurisdiction, with, of course, the goal being to democratize access to high-value assets, because most people don't have the capital to buy additional property or maybe even a primary residence. So being able to buy shares or fractions of those things can be a key driver in locking up capital and building wealth outside of fiat currencies, which are very suspect and can have all kinds of issues with it. So great to see. Congratulations to Hashgreed for that approval.
The NSEC, the Nigerian SEC, getting increasingly active, and I love to see Hashgreed come to the market, and a new blockchain, guys. They went and created the cross blockchain. That's pretty crazy. Well, before we get to the massive announcement from RealT, I really think you're going to love this. I do got to end on just a quick little note. We all have heard the news that Republic, major crowdfunding platform, plans to acquire INX. They had delayed it to today, this month, but now they've delayed it again to May 2024. Shows you that they're trying, but seems like they're still working through some of the details in order to have that acquisition fully go through. Definitely a merger of two great companies if that happens. But now we have the honor of having Remy Jacobson, one of the founders, co-founder of RealT, with a huge announcement they announced last week. So let's hop over to that interview. Hey,
hello.
Hello.
How are you today?
Doing well, Herwig. Kyle, nice to be here. Thank you for having me.
Congratulations and happy belated birthday to 5 years of RealT.
5 years in the making. This in itself is an accomplishment. We're not that many Web3 tokenization company, first of all, that started 5 years ago and that are still around 5 years later.
That's true. That's true. We've covered them all from start to finish on many different cases.
I know. I've been following all of your shows. You're my source of news on the crypto space.
Yeah, well, we're all here in South Florida together, so we gotta stick it out.
We appreciate that. In fact, we appreciate you coming on the show to tell us about a very big announcement I heard on your community call for your birthday. You mentioned that you've been working on this for over a year. I just want to set the stage for anybody who doesn't know RealT. Hundreds of properties tokenized, over 100 million in asset value. They've created a whole ecosystem that allows you to get loans, trade it on a DEX, really get your dividends from the actual property, right? Your rental income. But now you've gone ahead and done something groundbreaking once again, Remy. I'm going to let you take the stage. Go ahead and tell us what's going on.
Thank you. Yes. So for the last 5 years, we've been growing and building our expertise in tokenization. We tokenize 536 different addresses, representing about 2,000 units around the US and Panama. We opened up Latin America. This week, for our 5 years anniversary, we opened up the capital. We're opening up the capital of the company to our community. But before doing this, there were some major hurdles. Why would we tokenize something that doesn't have liquidity? Why would we tokenize something that is not tradable and doesn't go with the motto of RealT? So through work and finding the right jurisdictions, we are able to offer tokenization of our capital, a small part of our capital today for the community, and allowing them to have a fully tradable token under Swiss law, with secondary market not requiring KYC unless you want to take voting right or dividend. RealT doesn't pay dividend. We pay rent on the RealT token, on the real estate token, but on the company itself, we don't pay dividend. So this law applies for us, gives great liquidity. Of course, all the OFAC list and all this will be respected, but it creates quite an amazing tool for liquidity for companies, RealT being the first one to do it. And I hope our model will be copied by a lot of other companies, and we're happy to help them do it.
I believe people or other companies will follow this model. In fact, there's only one other company, I'm sure there are a few others that I'm aware of. It's Mount Pelerin that have done this in the past with their equity. And so Absolutely. I was a little bit familiar with this, but they never really, got as much traction as far as I know. They have a great, ecosystem, but the volume certainly doesn't represent what RealT does today for its properties, for example. So this to me is very exciting about, really meaningfully taking advantage of this structure and this jurisdiction and seeing what you can do when you really apply the right technology and community to it. I believe you mentioned some of the stats on your community call in terms of liquidity. Can you share those so that we have an idea? Yeah.
Of course. So over $100 million in primary market sales. Our secondary market today has about $1.6 million a month in exchange. Our lending platform has about $13 million. Right now, it's a little bit cut because we just launched V3. So it's in between V2 and V3. And that's on a $100 million ecosystem. And the lending platform up to last week only had about 30 properties because we were on V2 of Aves Code. Now we're on V3. We'll be releasing 99% of our properties. So we expect this to go up.
Wow.
Quite.
That's amazing. And go ahead.
Now, to come back to Montpellier, we work very closely with Montpellier. And yes, we absolutely did inspire ourselves out of their model, which was genius. There's another company called CleanStat Mining who's doing that as well.
Amazing. Well, I'm going to look into Inside Mining too, but I'm just...
CleanStat Mining. Full disclosure, it might be very familiar to you.
And anyway, you also, I remember from the community call, you guys have some pretty amazing shareholders on your cap table already, some investors.
We do.
You can share that on the show as well.
We had the pleasure of the honor and the pleasure of welcoming Tim Draper in 2022, December 2022, to the board of RealT, to the cap table of RealT. We also have the founders of 1inch, Anton Bukov and Sergey Kunz. We have the founder of Kyber Network, Loy Lu, who are all in shareholders of RealT today.
For now, as little as I think something around $50 you mentioned, whatever it ends up being, you can now be, on the same cap table as these guys and own a little piece of RealT. Yeah. That is pretty cool. I've got, for again, audience who is not necessarily familiar with RealT, you should be. I have seen properties worth hundreds of thousands of dollars literally sell out in minutes, hours, days, up to millions. I've seen you guys do. So I'm sure the 5 million target, it's probably already spoken for, to be honest, by your community. But it'll be available on the DEX, right? You'll be able to buy into it regardless. So that is
absolutely. It is spoken for. It will be available on secondary market, and I'm sure there'll still be room for newcomers as we're keeping some a little stack for one token at the time.
Yeah. So for the first time ever, folks, you can now own a piece of RealT itself. Of course, a big question I know folks are going to have, because we got a lot of U.S. viewers. What's the deal there? Non-U.S.?
Accredited U.S. possible, but mostly non-U.S.
All right. Accredited gives an opportunity. So that is very good to know. Always love to see a little opportunity for US to get in the table. I know, and I don't know if you can say anything, so I can say it for you, but I know you guys have been exploring and trying to figure out one day to make that all possible out here. So stay patient, folks. Stay patient while RealT gets on it. But thanks for coming on the show. Is there anything you want to close in terms of big announcements or big things we should be on the lookout for regarding RealT in the coming days, weeks, months?
RealT, the coming weeks will be the equity raise. By the end of the year, our governance token as well. By the end of the summer, our governance token as well. New products coming online as well, not just real estate, but more different products coming in the very near future.
Well, we can't wait to hear all those updates on the show. I'm sure you'll keep our audience and listeners in tune. But with that, we're going to let you get back to work, Remy.
Thank you very much, Herwig. Thank you, Kyle.
Good to see you, Remy.
Thank you for all the great news.
And thank you for being a partner for Tokenizes.
Thank you.
Bye. All right, let's head over to the market movements, Kyle.
Let's do it.
Well, after that amazing news from RealT, it's time to get into what's happening in the secondary market, folks. Things are alive and well and happening. And I got to kick it off with some pretty big news, specifically from Japan. So we announced around Christmas or on Christmas, the Osaka Digital Exchange, the ODX, they officially went live. Secondary trading with 2 real estate tokens. I am not quite sure, what level of volume is there. We're trying to get some insight, but I can tell you that they have announced that they're expanding beyond real estate. So that's great to see. That means they're going to be adding more listings, which I got to say, not to knock on our friendly U.S. partners, but seems like their listing speed is way faster than what we've seen here stateside, because they're already planning more listings. They even have what they call the Start Operations Committee, which actually includes members from other token issuers, from trust banks, including also blockchain platforms like Boostry and Progmat. So these issuance platforms, they end up tokenizing the assets that will one day list on ODX, right? And Progmat, by the way, is MUFG backed. And by the way, ODX is founded by SBI, a leading investment bank, as well as backed by Daiwa Securities, Nomura, SMBC, and the CBOE. So this is a very institutional grade platform. This isn't necessarily a startup per se, because it's backed and founded by the banks. And in Japan, we've seen a very interesting, coalition come together of all the major investment banks. The tokenization ecosystem out there is really led by the institutions as opposed to the startups like we kind of see here in the United States, although definitely changing these last 12 months or so with JPM, Citi, and everybody else getting in the game. So guys, what do you think about ODX expanding beyond real estate? Are you as excited as I am?
Absolutely. I think that, considering that they're backed by so many great institutions, like you mentioned, SBI, Daiwa Securities, Nomura. I mean, it's going to be cool to see, what other kinds of securities they're now going to dive into. I think maybe real estate, they used it as an internal, hey, let's see if we can get the hang of this. I'm excited to see what those other asset classes are going to be and who are going to be the participants / issuers to do so.
Totally agree, Jason. I think that we start with one asset class, wrap your head around it. But the reality is that with these tokenized rails, the point is that we can retrofit this for every type of asset and any type of transaction that needs to happen. So I think this is just, as we said on an earlier piece of news, it's just a natural progression, I think, for this to happen. And it's great to see it's happening sooner rather than later. And awesome to see from Japan. STM is a proud member of the Japan Security Token Association. And we are happy to work with a lot of those different companies and helping drive adoption.
Sure are.
Next piece of news, boys. I've got Fortunify. They launched their TAP tokenized asset protocol application. It is now live on Arbitrum, which is a layer 2 blockchain. The goal here is to produce tokenized treasuries, which is, as we said, the hottest kid on the block because of the fact that people want yield on their stable coins, and you can't do it without registering as security. Otherwise, it's rehypothecation according to the SEC. The TAP app's success on the Canto blockchain is leading its expansion into Arbitrum. So this is the second different layer 2 that they are working on. And supposedly they already have $13 million in total value locked through their protocol, which is great to see. That's liquidity driving to the underlying platform. The KYC compliant app allows the users to access US tokenized treasuries, and they do 24/7 minting and redemption. And it's processed during market hours. So basically, I guess they're just eating the float on closed market hours, but they are offering the services throughout. And the goal here is that they want to expand to all layer 1 and layer 2 solutions and provide this service for everyone. So major shout out to Fortunify for launching their second blockchain integration and to the success they've had so far.
Love it. Love it, love it, love it. It's just yet another growth of the RWA market, right? And Fortunify is leveraging Arbitrum, which recently is also, if to use your similar phrasing, becoming one of the hottest kids on the block. Love to see this. It's the benefit is 24/7 minting and redemption. That's what you love to see thanks to tokenization.
Yeah, absolutely. We've seen others, U.S. Treasuries get brought on, other assets too, get brought onto Arbitrum lately. Denari comes to mind when we speak of their tokenized stocks or equity stocks, right, like Coinbase and Yum Brands and McDonald's. But they've also done the 10 Bitcoin ETFs that come on. And so those are other assets. But of course, we've seen others also come on to Arbitrum. So great to see another player also using them.
Fun fact, actually, Jason, during the FTX days, the Grayscale Trust was the highest traded tokenized stock compared to others like Tesla and such. So,
wow. Okay. Some more info on there for our guests here. All righty, guys. Next piece of news, we have PYUSD. This is PayPal's stablecoin. Getting DeFi yield from Bakkt Finance, Morpho, and Stakehouse Financial. So just to make sure we're on the same page here, guys, PYUSD is a regulated USD stablecoin issued by Paxos for PayPal, and it was issued under the New York State Department of Financial Services, or the NYDFS, under their supervision, right? And so they're claiming that this is the first stablecoin added to a major lending market. And Morpho Blue, who is one of the parties involved here, is a decentralized protocol enabling the over-collateralization, lending, and borrowing of crypto assets, specifically ERC20 tokens on any EVM chain. And so essentially the way it works here is that PYUSD, the stablecoin, is deposited into a vault curated by Stakehouse Financial, which is a DeFi consultancy, on Morpho Blue's protocol, right? And so that gets borrowed or as a loan, right? And then Stakehouse Financial is choosing to use the permissioned wrapped version of Bakkt's BLB01 and Lido's WST ETH liquid staking tokens as principal collateral assets on the vault. So what are those two assets like? What does that mean?
So BLB01 is a tokenized tracker certificate tracking the price of iShares Treasury bonds 0 to 1 year UCITS ETF. It's backed 1-to-1 redeemable for the underlying assets cash value. And so the whole idea of having that and the Lido WSTE liquid staking token is the fact that they're using what Stakehouse is calling a dual engine, essentially an approach to combine traditional real world yields with crypto yields to optimize returns for those different market conditions that they'll be experiencing. So really cool way to bring more utility to PYUSD within the DeFi ecosystem. Any thoughts there, guys?
This is great. This is great. More potential yield for stable coins. And I think the interesting thing here is that I think it's important to recognize that yield being generated in stable coins is what drives more stable coins to be minted. And having more stable coins minted means more liquidity into the digital asset ecosystem, which over time will not only translate to speculation on crypto coins, but also drives adoption into other structured financial products. So the part of the problem why no one's investing in security tokens, for example, certainly at the rate that crypto is because of the fact that a lot of traditional assets are just easier to invest in with dollars. So if we can create more and more on-ramps to incentives to hold cash in stablecoin, it will then create more liquidity for the rest of the market. I think this is great to see, and interesting that they're working with PayPal's PYUSD, one of the newer stablecoins to come to market from a large traditional financial company.
That is a great insight, Kyle. And I just got to say, I love this for what it is. It's just pure financial innovation. This is truly the intersection of DeFi and RWAs, if you will, right? You're bringing in PayPal, who's got a stable coin into the equation. You got tokenized, assets through Backed. You got all these DeFi yields coming through the situation. This is what it was. This is the essence, the foundation of what we saw in the past in DeFi, just now leveraging RWAs and real proper stable coins, if you will, like PayPal's. So this is really great news to me. I gotta move it on to the Great Eagle Gold Corp, folks who are copying and following the playbook of Overstock. Back in the day, we saw that Overstock actually issued a dividend to their shareholders, and that dividend was a token that represented equity in Overstock. In this case, we're seeing a unique situation. Great Eagle Gold Corp is actually a publicly traded company in Canada. So they follow a lot of regulations. They got a lot of rules to follow. And they have officially announced their TPP, their Tokenization Partnership Program, which they say, quote unquote, affords shareholders a unique financial advantage, direct ownership in 10% of the total tokens issued to Great Eagle Gold during the mining title tokenization process of NI 43-101 certified gold resources, AKA Great Eagle Gold Corp. They have a mine that they're working with in Bajo Cacao in Colombia, which is the second largest gold producing region, apparently. Hopefully I said all of that right. But basically the point is that they have a mine. They've got gold, access to gold. But here's what they're doing. They're introducing a new concept where instead of mining the gold, they're going to issue you tokens representing the gold based on, essentially geologists and stuff telling you there's this much gold in the ground. Obviously, a discount is applied because you can't have the gold physically in your possession. But they're spinning it as an angle to say that it is green gold. By saying that, hey, by you buying this gold and using this gold and holding on to these gold tokens, we don't actually have to mine it in the first place, therefore being good for the environment. We're actually working with a client of our own on Security Token Advisors side, Arctic Digital Mining. They're specifically focusing on Alaskan gold mines. So clearly there's a trend here, folks. There's a big opportunity. I love it. Great kind of ESG narrative, but it brings more RWAs into the world, if you will, and gold that never needs to be mined, that gets used and trusted as gold. That is the essence, again, of tokenization. That's one of those great applications. So I would love for this to take off. I hope big banks, even central banks, or major corporations and such, treasury management, they could consider something like this easily. So Great Eagle Gold, they will be doing again 10% net token allocation to all their shareholders of these tokens. So I guess it's what they're doing is a great reason to go buy public shares of Great Eagle Gold on Canada, is my guess. So very interesting, guys. What did you think about this?
Yeah, I'm interested in like someone doing research that's, more analytical than I am, analyzing the price difference between like a futures contract on gold and a ownership in spot ETF in gold, ownership in a gold mine, and this type of like synthetic future in terms of like it's you own the gold, but it doesn't actually exist yet. So it'd be interesting to see like what the relationship is between all these different types of vehicles that still give you the same underlying exposure to gold, but in very different ways. And like some are more abstract like this one than others that are more like physical delivery in 3 months. So so there's some really interesting components there. I think it's makes sense from an ESG play. And just it's a new thing for me to wrap my head around in terms of how to value this, which I think is interesting.
It's brand new for sure. The only way to find out, to your question, is by tokenizing the gold in the ground in the first place. So companies like Great Eagle Gold, as well as Arctic Digital Mining, they're going to lead that charge. Looking forward to seeing what's happening. What else is going on?
Well, I have my last article here in the market movement segments for episode 224 is MetaWealth. MetaWealth raised $1.2 million in a tokenized real estate deal. So we're seeing liquidity in the tokenized real estate space, with 60% of their investors being from Romania, their country of origin there, or they're in Spain, I think the real estate deal is, but Romanian investors being the primary investor base here. The deal did attract what they say are 190 global investors that closed ahead of schedule because of this outstanding demand. And they are planning to list new Spanish real estate as well as exploring opportunities in Greece. And the fintech company has done over $7.4 million in tokenized fundraisers for apartments since its launch. So major shout out to MetaWealth. If you haven't heard of them before, they're clearly having a lot of success. And if you're in Europe and you either want to invest in tokenized real estate, hit them up, or sell tokenized real estate, hit them up, because they're doing some cool stuff and they're actually generating liquidity. So major shout out to MetaWealth.
Good for them. I think I read in the article that kind of touched on this news here that the $3.6 million raise here is the biggest in tokenized real estate, specifically in Spain, followed by the next one being only 65,000. So, obviously a huge difference there. I guess my biggest takeaway from this, my biggest wish, if you will, is that, I just wish more issuers would disclose more on, where are your investors coming from? Everyone's asking like, where are they coming from what platforms, from what jurisdictions, et cetera. So any more insights that any issuers have as to, where your investor participation is coming from, please let us know, because I think we're all curious to find that out. And to close out the market movements, we have an announcement from our very own security token market, which is that we launched our market report for January 2024. We will be coming back with our monthly market reports, guys, and we're starting it this year. So, just to show a couple stats here on what we're covering, the sections that we'll be including, at least in this first report. I mean, of course, it'll be evolving. But we're talking about key takeaways as a general summary for anyone that doesn't necessarily want the whole thing. But for those that do want to dive a little deeper, we are breaking it down by asset class, which has been demanded in the past. We're finally able to do that for you guys. We're going to be doing some marketplace spotlights, which will rotate every month. We're going to start looking at on-chain treasury products, as well as private credit, all that good stuff that we've seen rise in popularity last year, and ending with, of course, new tokens that we've onboarded over the past month and announcements. So, just to dive a little deeper as to what you guys can expect, here's one of the graphs that you'll find in that report, which this one breaks it down by asset class. Here are some key stats that you guys will find on those asset classes. But of course, we do include some insights as to, what we've seen, where we think those stats came from, why did those asset classes perform the way that they did, or are there any specific tokens that performed a certain way that had a certain impact on those stats. So all good things that you guys will have access to through our monthly market reports, which are always readable and accessible on our Medium, as well as Security Token Prime, our research portal. The link, though, directly will be in the description for the show this week, so keep an eye out for that.
Just a great job all around to the team. This is beautiful. That's what it is. Gorgeous charts, graphs, insights coming to you on a monthly basis. That's what the market needs. And with that, guys, let's head on over to the company of the week.
Let's do it.
And it's that time, Kyle, that part of the episode where we get to choose a company each that we thought made the biggest moves in the space. It's our Company of the Week award. In fact, it puts you in the running for Company of the Year, potentially, for 2024. Congratulations to Republic, who won 2023. But it's 2024, and it's a new week, episode 224, coincidentally. Kyle, what do you got?
It is a new week, and I have a new winner. My winner this week is Bakkt, which is the company behind building the tokenization platform, working with the PayPal US dollar, the PYUSD. Bakkt Finance is allowing users to take that stablecoin and actually bring it onto Morpho Blue, which is a decentralized protocol that allows for collateralization and lending of stablecoins. You can deposit your PYUSD into a vault. That vault is curated by Stakehouse Financial, which is a consultancy that's working on the project. And you can then launch the wrapped version of Bakkt's, tokens to get collateral on this stuff. And deep DeFi people will be able to track and follow all the different synthetics that are created with these vaults. But all you need to know is that Bakkt Finance has been able to take the PayPal stablecoin, which, again, as we talk about, you're taking fiat dollars and putting them on these blockchain rails that allows for all of these other companies to build cool financial infrastructure behind this float without the company itself having to do the work. So PayPal does the work of creating the stablecoin, and now you've got Bakkt Finance already building lending and collateralization options behind that underlying stablecoin. I think that's really, really cool, and excited to see the adoption and drive of new projects just like this.
That is a great choice, Kyle. And makes total sense. Again, back to spearheading that innovation, as I mentioned earlier on the segment, of just an intersection between true finance and RWAs, if you will, into true DeFi concepts and technology. So I'm just excited to see all this come together.
How about you, Herwig? Tell me, who's your choice this week?
Well, I gotta say, a special place in my heart to RealT for announcing their big raise. I'll probably end up giving it to them as soon as they actually announce the completion of it. But I had to give it out to Citi because Citi, I have never seen so much analysis and republishing around this announcement. I don't know if they've just got a crack squad team of marketers over there, but people are talking about this. This is making the wave. Citi partnering with Wellington Management, with Wisdom Tree, using the DDCC, leveraging Avalanche, which we know is very catered towards institutions. This is a very, very big deal. It's what we've been talking about. The future of Wall Street is tokenization. Specifically, funds is a massive opportunity, whether it's actually creating liquidity for LPs or some form, or whether it's doing waterfall distributions, you name it, it's all there. They're testing it all. So to know that Citi is also spearheading this, they've been a little quiet. They announced themselves, they put themselves out there, but this is their first major big move, I think, to show us, to tell us that they are going to be a big player in the tokenization space. I think proof of concepts is obviously where it begins. Next step, commercialization. So let's see what happens.
I think that's a great choice, Herwig. It makes a lot of sense. It's, I think, the biggest news of the week, and exciting to see just all of the institutional adoption and the real liquidity that gets driven from them onboarding new opportunities. You can't go wrong picking Citi.
Well, what a great show, as always, Kyle. Shout out to Remy for coming on and letting us know the big news. And congratulations to our companies of the week. Whew, I'm already excited for next week. But with that, I hope everybody has a great time. You can go to stm.co to get all the latest trading news, all the latest information. It's your one-stop shop. You've got it all. Tokenization, RWAs, security tokens, whatever you want to call them. It's all there. And of course, we hope to catch you again next week. As always, every Monday at 10 a.m. Signing out. See you next week. Happy tokenizing.